Hello, I'm Christopher Crystal with Financial Stockholm, and today is Friday, November 11th. We have some groundbreaking news here in Sweden, which is getting a bit of critique from former heavyweight politicians, but they're sticking to their plans, and they've acknowledged that with the budget and the economy in Sweden, the strategy they want to pursue will not allow them to really meet the climate change goals or decarbonization as planned previously by 2030. And the finance minister, she's given very frank comments of you either are doing it or you are not doing it, and rough translation into English. And so uh, they're very clear that they will not be able to meet the target climate goals. And so that's going to be a focus for a lot of people. But you have to remember there are many companies that are already complying, and there are many companies that are already acting in a way that their pension fund investors are requiring them to do. And so it's, I don't think it's a complete disaster. And there's a number of critiques about IPCC information and climate change, and really what's not focused on is the actual data. So if you're taking a look at that, you can get a better understanding. And if you want somebody who would help you wade through that, maybe you look at somebody like Roger Pilkey on Substack, or you could look at Steve Kunitz. They're both people in the camp of how to handle the climate change or mitigation and what's actually happening. And then, of course, Bjorn Lomborg would be somebody who's anti-establishment, so to speak, and talks more about adaptation and how climate policies could actually harm many of the poor people that are supposed to be helped. And so with that, you have the COP27 is concluding today. Joe Biden will be there with the ambassador to the UN, John Kerry, as well as Nancy Pelosi. And they'll be unveiling the US carbon plans. And with that, they'll be talking about the carbon tax credits, which many consider greenwashing. And it's getting some critique even at the COP27. So we'll see how this is handled. But on top of that, we have European countries are buying up all the African gas that they can. So while decarbonizing, they are hurting the countries that they want to help. So this creates a bit of a conundrum in how you're going to approach this. And then also you're using a source that is a carbon and fossil fuel and releases a lot of methane. And methane is very dangerous for the atmosphere. Carbon is generally a plant food. You can make the argument about warming or not warming. However, it does help plants grow when it's in the form of CO2. So methane, however, kills most things. If you can, so the point is there'll be a lot of discussion going forward, and the approach to carbon, as many of the European economies are slowing. We've already seen this from Great Britain this morning, that their Q3 slowed down by 2%. So this looks like they're sliding into a recession. And they only have two plants, nuclear power plants, that they're looking to produce. They may be closing down the Sizewell C. So going forward in terms of green, you do see more and more people moving towards this intermittent energy of windmills and solar panels and batteries. The batteries will take some time to build. And in that time period that you have to build it and store the energy and then use it for business, you may see a severe contraction of economies. That's a fear. And many say that these can be met. However, if you listen to somebody like Bjorn Lomborg, who goes through it from an adversarial point of view and makes the argument about how it doesn't really work effectively, then you can get the other side of the argument. So on the markets moved yesterday up as a result of what looks like it could be the beginning of a declining inflationary trend in the United States, where the CPI dropped to 7.7. And it would be great for the people in the United States if that would continue. However, as you have the logistic issue still not resolved, and you still have the problem with the diesels, so you don't have the refinery production in place for the oil that's coming into the US to create the diesel. and the main supply for that diesel was the Keystone Pipeline, which has been cut off, and therefore you don't have the production refining ability set up for the oil that's coming in to produce the diesel. We may be in for another economic shock in the United States. That's a big fear. So there's a lot of fear. There's very little fundamental change that's going positive. We see in the tech sector, due to the rates and lack of earnings, many of these companies are looking at and have fired employees. Twitter is announcing, or Twitter CEO Elon Musk, or whatever title he's calling himself these days, for chief operator for complaints at Twitter, has said that they may go bankrupt and is forcing employees to go to work where they actually have to work at the office. In just about any other industry, that's not heard of. But at Twitter, this comes as a shock to many of the legacy employees. There are rumors of continued top-level individuals moving on the way out, such as Joel Yolf. But we'll see what actually is reality. But the subscriber model would actually continue with Twitter and allow it to become profitable. And the question is, can he convert that rate fast enough to show advertisers that they want to be there, and with the horrors of free speech? So that remains to be a Twitter, but it doesn't look like the experience will change that much. On top of that, another tech company, or if it's considered a tech company still, Amazon, is looking at cost cutting, and they were one of the major hirers during the COVID lockdowns. So we'll see how that affects the economy. But the tech sector is far from done, and logistics are yet to be resolved. China trade shipping figures did decline. They're taking steps to get into the Hamburg ports. So they took that 25 or just under 25% stake, and global GDP figures were declining, and that's why OPEC was cutting. So if you're looking at how the fundamentals are, they don't look very strong. And for Sweden, we're looking at continued safety issues. We're looking at fraud issues. And I saw from the Swedish migration that they will be enforcing some identity control checks to see in Sweden who's actually a citizen. So we're in the midst of kind of a quest for the Swedish identity, involving the green movement and involving our security and safety, and trying to get the amount of robberies and shootings and bombings in a decline, and how we're going to approach this. So the market is rallying up, or had rallied up. So if you can make money as a trader, go for it. If you want to make money on fundamentals, then they're still far from there yet. But you can always make money, and it's up to you on how you'd want to do it. So I wish you the best and hope you have a great weekend, and thank you very much.